Hi folks, I'm going to show you how to read your account statements, which you should be receiving in your email once a month. The statement will look like this. It will have your account name up at the top, account number, your name here, the date that the statement was printed, and the expiration date of the funds if there is one. Over here you'll see some dates. The effective date is generally the date of the transaction. The posted date is the day that it was put on the spreadsheet. Description is, as you would guess, a description of the transaction. And these next 6 columns here are internal reference numbers, so you can generally ignore those. And then over here you have credits, which is budget or money coming into your account. Debit is expenses. And then encumbrances are money that's set aside for a future expense. So it's money that you haven't actually spent but plan to spend in the future. And over here is a running balance. And then down at the bottom you'll see your ending balance over here. So over here you can see on 9/1, which is the beginning of our fiscal year, Stephen Smith had a balance that carried forward from the previous year. And that balance was $57.8909. You can see over here that that's the balance at the end of that line, so that's the balance as of that time. And then over here he started spending some money. In October he bought a computer, and it cost almost $1,400. So that amount is listed as a debit. It's money that's coming out of his account, and you can see his balance has gone down over here at the end of that line. There are some more expenses. The balance continues to go down. Over here he bought an Adobe site license and then got tax credited for that purchase. So here you see that purchase was deducted from his account, and then here you see this red number in parentheses. That means it's a negative number. So this is reducing an expense. Basically it's not new money coming in, it's just reducing an expense that was already made. So as you can see, his balance goes up at the end of that transaction. We have a few more expenses here. And here we see an encumbrance. Anytime you put a pre-trip authorization into Concur, the amount that you estimate that you're going to spend for that trip on this account gets encumbered on your account. So here, Stephen was planning a trip to Brazil, and he estimated that he was going to spend $410 on this account. So you see that the balance is reduced, but that money isn't actually spent. If he were to cancel this trip before he went, then the money would be put back into his account. He's just setting it aside so that he knows that he has it for a future expense. When he actually went on the trip, this next line, you can see he only spent $102.58 out of his account. So at the time that your travel reimbursement is paid, the encumbrance is released, and whatever you actually spent gets paid. So in the case of Stephen, he only spent $102.58. So the full amount of the encumbrance was released, $410, and you can see these two things cancel each other out. Positive 410, negative 410. And the only thing that actually wound up coming out of his account was this $102.58 and the Concur fee for that trip, which is this 31 cents, and that Concur fee gets charged on every report that you submit in Concur. Another place that you'll see encumbrances is on payroll. For example, here, Stephen hired Ryan Walters, and whenever you hire someone who's not in a wage position, so that means grad assistants, full-time staff members, yourself, but not student workers, when you put them on payroll, payroll automatically encumbers the full amount of their payroll for the entire time that you're hiring them at the beginning. So that way, if you've promised Ryan Walters a job from January 1st to May 15th, you'll be sure that you have the money to pay him all the way through the end of the time that you promised to pay him. So the encumbrance sets the money aside and makes sure that it doesn't get spent on other things, and then you wind up without any money to pay Ryan come May. So here's where we put Ryan on payroll, and payroll estimated that it was going to cost $2,800 to pay his salary for that time period, and $1,032.67 for his benefits for that time period. Now, sometimes you'll see a line like this that says auto adjust, and that's just something that payroll does automatically that adjusts the amount of the encumbrance. That happens fairly frequently with benefits, sometimes depending on the insurance plan that the person picked, or the number of days in the month, or just various factors. The amount of the encumbrance, the amount of money that they had set aside for the person's payroll, needs to be adjusted, and so that just changes that amount that's set aside for future expenses. So in this case, it looks like Ryan picked a cheaper insurance plan than what they had originally anticipated, and so a large chunk of this encumbrance was released for his payroll. So you can see the balance went up because there was less money set aside. And then once Ryan actually starts getting paid, then you'll see things like monthly payroll or bi-weekly payroll. And at the time that the payment is made, that shows up as a debit here, and then the encumbrance gets released. So it might look like you're paying Ryan twice, but you're really not. What it's doing is paying him whatever his monthly pay is, and then it's releasing an equivalent amount of the encumbrance. So you can see the balance doesn't actually change because that money was already set aside up here, just now it's a debit rather than encumbrance. So your amount of expenses went up, but your encumbrances went down. And that'll continue to happen as the time goes on, but as you can see, there's still money encumbered down here in the totals because not all of his payroll has been paid yet. And then down here at the bottom right, you'll see your ending account balance, and that lets you know where you are as of the day that the statement was printed. Also, if you'd like to see an updated version of your statement at any time without waiting for it to be mailed to you, you can see it at your convenience in the Business Office folder. You can get there by going to Computer, then Offices, then College, then Business Office. Then you want to find the fiscal year that you want, and as a reminder, the fiscal year runs from 9/1 to 8/31, so 9/1/13 is the beginning of FY14. So if you want to see a spreadsheet that's in FY14, you go there, you'll find your account number, open up the spreadsheet, and there may be many people who have money in an account, so you can just click on the tab with your name on it and see the transactions that have hit your account and the ending balance at the end, just like on the PDF version that we mail you every month. If you have any questions, feel free to contact the Business Office and we'll be happy to help.